Hello, hi. So today I just wanted to share with you about whether inflation has actually peaked, and as you know, uh, the higher the inflation or the higher the inflation expectations in the market actually means that the nasdaq would be greatly affected because higher inflation expectations would normally mean that the Fed would be more hawkish to increase interest rates instead of taking a dovish, softer approach. So the 10-year yield, treasury yield, is one of the indicators that kind of like manage the inflation expectations. It has gone down from 3% to about 2% yield. So the lower that it goes down means that generally the Wall Street and the market thinks that inflation expectations has dropped, will continue to go down. As you know that the May inflation data was about 8.9%, and then the June one was about over 9.1%, and the July inflation data is coming up in this Friday, another 2 more days to go. So everyone is expecting for the peak to drop for the first month. As you can see, oil and gas has really dropped below $100, and also there's been this talk about what you call it, the gas tax waiver by the Biden administration. Um, that's one of their plans that they need to go through Congress and the Senate, which will also reduce the gasoline price in US as well. We are talking about US in isolation because Europe are in a very unique special case, and then the US dollar has weakened a bit but still remains strong, which is also another good thing for companies, whereby they are not so affected by inflation, especially purchasing raw materials. So if you talk about grain as well, a grain shipment, Turkey broker a deal between Russia and Ukraine, and it helps to ease the food shortage supply as well. So another thing I like to say is the 11,000 plus Nasdaq index is actually holding up very strongly with the Q2 results of all the FANG stocks. From Amazon, doing very well from 110 plus to 134 right now, and Google dropped to around 10 something to 115 right now. Meta is the only one that isn't doing so well, but it's actually recovered a little as well from 150 something. Then you got Netflix, which is 180, 170 ish, and now 160 ish, in fact, and now it's gone up to 220. And Apple as well, which was at 140 plus, now it's at 160. So basically, the Q2 results, as you can see, Q2 is actually the worst, probably one of the worst results that you can expect from every companies because of the Ukraine war and all the fears out there, and they are still holding up pretty well. Some of course giving out not so good, weaker, more conservative Q3 guidance, but overall they managed to hold well with their current PEs and current valuation and current pricing. So I believe that we are actually at the deep right now, buying at the deep. Of course, a few weeks ago was even better. So they are actually unlikely that Q3 will be worse than Q2. And then of course there are still a lot of uncertainties out there, like the China and US, China and Taiwan war, which is the Pelosi visits that happened yesterday, and the cold winter that's coming up from Europe, that might cause consumer spending lowered, and especially for US company that have a global consumer reliance, not just in US, they would be affected a little bit. So yeah, I just want to share with you that inflation has kind of like peaked and is actually on its way down, and they are all good signs for the Nasdaq. So yeah, so hold that belief, and I hope, but do your own due diligence. It's not financial advice, and hope to see you again in the next episode.